You're listening to Uranium Spotlight Podcast, sponsored by Purepoint Uranium Group. If you're following this market closely, you'll want to explore Behind the Curve, understanding when and how the uranium market turns, a new white paper that shows investors how to spot the cues that come before uranium prices move. And now, your host, Chris Farastad.
It's November 3rd, 2025, and this week on Uranium Spotlight, spot prices steady as trading stays strong. Cameco secures an $80 billion U.S. reactor deal. Finland turns to Kazakhstan for supply. Canada climbs back to the top of global production. And Premier American Uranium posts a strong PEA in New Mexico. Last week, the uranium spot price edged slightly lower, opening at $79.51 and closing at $79.13 a pound, U3O8. Following a week of brisk but balanced activity. Prices initially rose sharply early in the week as the market reacted to several bullish headlines from the NEI International Uranium Fuel Seminar in Charleston. Optimism surrounded reactor restart initiatives, new build announcements, and Cameco and Brookfield's landmark $80 billion partnership with the U.S. government to deploy Westinghouse AB1000 reactors nationwide. Momentum was further lifted by NextEra and Google's plan to restart Iowa's Duane Arnold plant, reinforcing nuclear energy's growing role in meeting AI-driven power demand. Trading volume remained elevated, with 10 spot transactions completed during the week and additional activity early Monday. Prices reached as high as $82.60 a pound midweek before easing as new selling interest emerged. The U3O8 price settled at $79.85, down $2.35 for the day, but still up $2.35 week over week. The convergence of local prices reflected an increasing competitive trading range, $79.50 at Cameco, $79.75 at Orano, and $80 at Coverdine. While spot activity has remained robust through October and into early November, the term market was notably quiet, with no new utility awards reported. Utilities continue to evaluate offers for deliveries beginning later this decade, and several are expected to re-enter the market in the coming months. Overall, sentiment remains constructive, supported by accelerating nuclear growth and tightening long-term supply expectations. The heavy trading we're seeing now is one of the cues discussed in Behind the Curve, the white paper that shows investors how to recognize when uranium's real move is about to start. Cameco and Brookfield Energy Partners announced a sweeping new strategic partnership with the United States government valued at $80 billion. The agreement strengthens their joint ownership of Westinghouse Electric Company and is aimed at accelerating deployment of Westinghouse's AP1000 reactors and other advanced nuclear technologies both within the United States and internationally. Cameco CEO Tim Gitzel called the deal a major milestone that builds on their success as co-owners of Westinghouse. He said the partnership is centered on value creation, adding that the May 2025 executive orders on nuclear development have positioned the U.S. government to use its full financial, regulatory, policy, and diplomatic toolkit to help advance new reactor construction. That coordinated support, he said, should drive long-term value for Westinghouse, its partners, and the entire nuclear industry. Under the structure of the agreement, the U.S. government will receive a participation interest that, once vested, entitles it to 20% of any cash disbursements above $17.5 billion from Westinghouse. Vesting occurs only after Washington makes a final investment decision and enters definitive contracts to build at least $80 billion worth of new Westinghouse reactors in the United States. If Westinghouse completes an initial public offering by 2029, valued at $30 billion or more, the government will have the right to purchase up to 20% of the company, with the purchase price reduced by $17.5 billion. For Cameco, the implications are wide-reaching. The company expects growth through Westinghouse's Energy Systems division during the construction phase and continuing demand for its core fuel fabrication and reactor services businesses over the operating life of the new fleet. The arrangement effectively locks Cameco into the center of America's next wave of nuclear development and ties the company's future directly to the global reactor build momentum now gathering pace. For investors, the key takeaway is that Cameco's partnership not only ensures a decades-long revenue pipeline, but also positions it as one of the few companies capable of supplying both the technology and the uranium fuel needed for the nuclear renaissance. Across the Pacific in Kazakhstan, Cameco's main rival and the world's top uranium producer, Kazatomprom, faces growing pressure on its already committed output. Much of its production has already been earmarked for Russian and Chinese buyers, leaving little flexibility for Western utilities seeking secure supply. Now a new player, Finland, is entering the picture. Finland's government and state utility Fortum have opened talks with Kazatomprom for potential uranium purchases. The negotiations follow the Finnish president's recent visit to Astana, and though details remain scarce, Kazakhstan's Nuclear Energy Agency confirmed that discussions are active. The move follows as Finland continues to distance itself from Russian nuclear fuel dependence. Fortum has already transitioned its Loviisa reactors to Westinghouse for fuel fabrication and now wants to diversify its raw material sources as well, covering everything from U3O8 supply through conversion, enrichment, and fabrication. The volumes under discussion were not disclosed, but any agreement would further strain Kazakhstan's ability to allocate uncommitted pounds to Western buyers. For Kazakhstan, it's another validation of its role as the world's swing producer. For Europe, it underscores just how few credible alternatives remain for immediate deliveries of non-Russian uranium. Kazakhstan's supply network has been under mounting logistical and geopolitical stress, with transport routes constrained and Western sanctions complicating payment channels. Even small incremental contracts, such as the one Finland is exploring, highlight how rapidly global inventories are being spoken for. As new reactor restarts accelerate, especially in Europe and Asia, the competition for clean origin uranium has become increasingly fierce. For investors, this development reinforces the reality that Kazatomprom's material is effectively sold out years in advance, and that Western utilities will likely bid earlier and pay higher premiums to secure reliable supply, factors that continue to tighten the broader uranium market. According to recent reporting in the Northern Miner, Canada, led by Cameco and its partners, is expected to surpass Kazakhstan as the world's largest uranium producer before the end of the decade. Canadian output, which totaled roughly 26 million pounds U3O8 between 2020 and 2023, is projected to reach 30 million pounds a year by 2030, driven by mine restarts and new developments in Saskatchewan's Athabasca Basin. In contrast, Kazakhstan's production is forecast to fall sharply, from nearly 80 million pounds in 2020 to just over 29 million pounds by 2030, as existing well fields deplete and new projects encounter delays. The shift would mark a significant rebalancing of global supply, returning Canada to a leadership position it has not held since before the Fukushima slowdown. Australia and parts of southern Africa are also expected to expand output, with new projects advancing in Botswana and South Africa, while the United States could see production multiply more than tenfold from pandemic-era lows as idle ISR operations restart. Still, even with these combined gains, global mine supply may not keep pace with the reactor expansion now underway. Demand continues to accelerate as dozens of new plants are approved worldwide, and as life extension programs for the existing fleets consume additional fuel. Analysts warn that unless development timelines shorten, the world could face a material shortfall as early as 2026 or 2027. Financing hurdles, permitting delays, and slow rebuild of conversion and enrichment capacity remain key risks to meeting that demand. For investors, the message is that while Canada's resurgence will help stabilize supply, the overall supply remains fragile. Continued investment and policy support are critical if the market is to avoid a mid-decade uranium squeeze that could drive prices substantially higher. Premier American Uranium has released a preliminary economic assessment and updated resource for its Cebolleta project in New Mexico, outlining one of the more compelling development cases among U.S. uranium juniors. The study envisions a 13-year operation producing 1.4 million pounds of U3O8 annually, 18.1 million pounds in total, with an after-tax NPV of US $83.9 million. Pre-production capital totals US $113 million, including a 35% contingency, and life-of-mine free cash flow is estimated at US $287 million. Operating costs average US $41.60 a pound, supported by a low-cost heap leach process that avoids reliance on legacy conventional mills by sending uranium-loaded resin to existing ISR plants. Sensitivity work shows strong leverage at $125 a pound. Uranium after-tax NPV rises to $325 million, and at $150 a pound uranium to $488 million. Metallurgical recovery improvements could nearly double project value. Updated resources now total 20.3 million pounds indicated and 7 million pounds inferred, up 9 and 45% respectively from 2024 figures, making Cebolleta one of the largest undeveloped uranium deposits in the western U.S. CEO Colin Healy says the project could become a cornerstone asset supporting U.S. energy independence, with optimization work already underway. For investors, the key takeaway is this. Cebolleta offers rare U.S. scale with modest capex and high torque to price, precisely the combination that gains market traction when domestic fuel security becomes a policy imperative.
Before we wrap up, if you haven't yet read Behind the Curve, Understanding When and How the Uranium Market Turns, it's worth your time. It explains the real signals that reveal when uranium prices are about to move, long before the headlines catch up. Order your Behind the Curve white paper at www.uraniumspotlight.com. You've been listening to Uranium Spotlight, your weekly podcast dedicated to the latest developments shaping the uranium fuel market and its role in the global energy landscape, sponsored by Purepoint Uranium Group. While our passion for this sector is undeniable, remember that nothing discussed here should be taken as investment advice. Our goal is to provide a clear and balanced view of the factors influencing uranium prices. Join us again next Tuesday for Uranium Spotlight.